It's day one of the Consumer Lending Summit, and you are about to watch the last session before our lunch break. In this session, we will join James Celli and Michael Perkins from LoanPaymentPro. They will show us data on payment trends from 2020 and multiple ways to optimize the way you fund loans and take payments to remain as competitive as possible in 2021. LoanPaymentPro has been kind enough to offer free push-to-card instant funding and a bonus session on the small dollar rules payment provision to our TCLS All Access Pass holders. This is a $20,000 value. Make sure to upgrade if this is of any interest to you. Without any further ado, let's jump in with James and Michael. Guys, I'll be there in a second. TCLS attendees, thank you so much for joining this session with James Celli and Michael Perkins from LoanPaymentPro. We are super excited to have you guys today. This is going to be pretty incredible. And today we're talking about what our TCLS attendees can do to relieve the negative impact of lockdowns, pandemics, and uncertainty on their borrowers. We're going to go deep into the trends of payment processing. We're going to talk about COVID's impact on payments. We're going to talk about how different changes in payments and changes in our industry are affecting people's businesses. These guys are going to go deep on the data and show us what we should be doing to adapt, pivot, and thrive, how we can mitigate the impact of all this stuff, and how you can better leverage the technology that you're probably already using to get more to thrive as a business and all that kind of stuff. It's going to be pretty incredible. We're also going to be talking about the CFPB's pending payment provision rule and the Nacha rule update as well. So this thing's going to be packed full of value. And before we dive in completely, I'd like to start off with a quick question for you, James and Michael, if that's okay with you. Just curious, how did you find yourselves in lending, and how did you end up being passionate about this? How did you decide to, build a career, build a business in this space?
Sure, funny question. But first, Alex, thanks for having us. We're honored to be a sponsor of TCLS and participate alongside all these great industry leaders like yourself and Infinity. So thank you. But as far as my passion goes and what led me to where we're at today with LoanPaymentPro, my background is payments, and we used to provide e-commerce payments, internet retail payments, anything that was card not present, mainly around Visa, debit card, Discover, and American Express. And we saw a huge need for payment acceptance in the lending space back in 2013, just before Operation Choke Point. Dare I mention those words, but I think we need to be keen on that subject in the near coming future. But I saw an opportunity to take a technology-driven web application to automate compliance adherence and apply that to a much-needed industry that had a big demand in the need to take payment from its borrower on debit card, but there weren't any payment processors doing so. There was maybe 2 or 3, and they were doing it the wrong way in a non-compliant fashion. So I coupled my background with technology, web-driven, database-driven web applications, and payment processing, and brought that to the small dollar consumer lending market. And it started out as a concept in 2012, 2013, and here we are today. Luckily enough, we're a proud member and partner of Infinity.
Wow. That's really cool. I've actually never heard the background story of how you started your company and how you found yourself in this space. So thank you for sharing that with us. That's exciting. Sure. And what about you, Michael? How did you get into this?
Yeah, great loaded question there. So I've been in the space roughly 15, 16 years. I actually started off in politics and then left and joined one of the largest online lenders at the time that was transitioning from storefront to online. And I was lucky. I was in a position where I was able to really see, do, and touch almost every part of the business. And so I was there for several years, left, and then started my own lead generation company. I had that for about 10 years. And, while I was a pretty decent lead generator, focused on high quality, I always had, the lending side was always calling me back. And so I naturally gravitated towards working more with lenders on the technology and consulting side, and then went back and got back into the lending side as a lender a couple of different times after that, either with my own portfolio or working for, one of the other largest online lenders, heading up their marketing. But I've been really lucky in the aspect that I think, let me back up. So this space, probably the best part about this space is that it's extremely complex and there's 1,000 moving pieces. I always give this analogy of there's 30 levers in the wall. And whenever you pull one lever, whether it be from underwriting, from a marketing and legions perspective, from a risk perspective, operations, payments, 5 or 6 other levers or more can move from there. And, what I love about this space is that, it took me years to really understand it, but the fact that I've been able to be involved, I think at a pretty, really in-depth and almost extra level, from the actual lending operations to underwriting and risk to marketing lead generation. And now payments was the last area I really didn't have that great of an understanding of. And so that's going to be my mission the past 2 or 3 years, to really have a deep dive into payments. And it's really coming full circle. So it's, as far as the passion, what drives me, it's really just the complexity of the moving pieces and how can we help, solve, problems and, and help our lender clients going forward.
Wow. Dang, that is cool. So there's a lot of expertise amongst these two guys right here. Everyone who's watching, it's not just a payment processing company, but they've been around for a long time. One of the best payment processors in the space. We can vouch for that. Incredible company. And Michael's done a ton of stuff. Been on the lending side, high level position, kind of experienced the whole life cycle of a loan. This is awesome. Okay, good. So our audience knows where you two are coming from. So that's exciting, guys. I think now let's go ahead and just dive right in. So let's start with COVID and its impact on payments. And I think I'm going to start with a question for you, James. How has the pandemic and COVID impacted the industry from a payments perspective?
In many ways, I think it's been a daunting element that we've had to deal with, but I think it's forced everyone in the space to become more adaptive and to take light and understand the technology that's available, especially when we have to work with our borrowers as lenders in a different realm, a different environment today than we did, pre-COVID. So first off, it's changed the way that we've both behave as lenders and borrowers. I think, there's many things that have impacted the industry, but as a whole, as a takeaway, lenders now are understanding that they need to be more effective and efficient by using things like enhanced payment solutions and new payment products, and making use of the integration that is available in platforms like Infinity. So, a couple takeaways and things that I can add to specific impact. Biggest item is, payment declines. We've seen a payment decline that's relative to reduced lending volume. And I think that's a given with everybody, right? Through, the addition of stimulus and extended unemployment and the lockdown and what the pandemic has caused our general marketplace in the form of borrowers to have less demand for loan origination, that relates to lower payment volume. So that's been the biggest impact that we've seen from our perspective as a payment processor. And, like I mentioned, it caused lenders and borrowers to rely on automation and technology, which I think is a positive, and we can get into that in more detail here as we move on. But I think everybody's focused on phone, web, mobile payments. It's all at an all-time high compared to where it was pre-COVID. Additionally, there are some exposed risk, and the increase in exposed risk is in the form of chargebacks, disputes, unauthorized payments for bank drafts and ACH. So lenders need to tighten up, if you would, and really tighten the belt and understand how to better protect themselves, but at the same time, better provide access to credit and service their borrowers.
Interesting. That makes a lot of sense. So it seems like you have seen some stressful things, but a lot of opportunity as well. And what you guys are kind of seeing is that people that are embracing and leaning into embracing and utilizing new technologies, building better relationships with partners and teams, instead of just kind of isolating and pulling back in fear. Those are the companies that are better able to adapt and the ones that you're seeing be most successful. Am I understanding you correctly?
Absolutely. And especially with the ones that were already adopting these methods and strategies, and the ones that had those payment tools in place, they have been already, making use of it. And that's what those lenders have been able to take advantage or be less impacted during this time.
Nice. That makes a lot of sense. So can you guys elaborate on the current data and trends that we're seeing with payments as a result of the pandemic and the current state of the economy?
Yeah, I can jump in. Great question. So, as kind of what James mentioned, and obviously just due to the COVID, the pandemic by itself, I mean, there's been a lot of changes in volatility, in the industry over the last 10 plus months. And most of that has really been a shift from storefront to online, especially for that space. So I'll throw a few stats that you hear, and you can, reference to the slide that should be up as well. So I'll go through a few of these, but first we've seen a 17% increase in declined payments. So just the payment attempts that are actually failing, those are a little bit higher increase rate. It obviously varies month to month, and it's starting to level out now to kind of pre-COVID levels, but there is some volatility there. Probably the biggest item out of all is the 72% decrease in in-store traffic or face-to-face payments. Face-to-face, going into a store to go in to take a payment, or to take a new loan, et cetera. So that's probably been the biggest impact. The transaction sizes are smaller, which means smaller loans overall. So the amount of the loans are typically shrinking some. And for any customers in collections, the collection rates are decreasing by roughly 30% compared to pre-COVID levels. And that's obviously going to be due to customers being laid off, furloughs, et cetera, just out of the workforce. And hopefully, as things progress, we'll start seeing more and more of those customers come back into the workforce going forward.
Wow. Okay, that's really helpful. So some of those stats can be a little bit crazy. People coming into stores way down, collection rates not as successful. I'm hoping you guys aren't just going to bear, some scary news, but that you have some potential solutions for our viewers as well.
We do, but we're going to leave those for TCLS bonus items.
Oh, nice, nice. Way cool. You guys, that's awesome. Okay, so with that being said, has there been any relief offered by the industry banks or processors or associations like Visa, MasterCard, Nacha?
Yeah, that's a great point to bring up. I actually have a list of bullet points here that I'd like to reference. But as far as relief being offered, the answer is yes and no. Relief has been offered by many entities and individuals, both associations, as far as Visa, MasterCard as a card brand association, and Nacha have offered relief. But one thing to make note of, I think, the industry as a whole, where we find ourselves currently, not just the dynamic of a pandemic and COVID, but change of administration and what's happening with some of these regulatory bodies. I think we're up against a challenge of a possible second wave of Operation Choke Point. And that's just something we need to keep a close eye on and keep a close watch on legislation. But, that's not to be, completely taken as bad news, because, we work hard to implement and put forth the technology and the products and tools that allow lenders to be effective, yet have a minimal impact by things like a second wave of Operation Choke Point. So, who's offered relief in this space? One of them starts with both Visa and MasterCard. They've extended updates to their rules and pricing from April of last year to April of this year. So originally they had extended it from the March-April era last year to July, and then it was extended again. So that's been great relief on merchants, and it applies to all merchants, right? From a Visa, MasterCard and banking consortium interchange rate structure that has been delayed, which is benefited lenders in this case. Both banks and card brands are encouraging card issuers to work with merchants in order to prevent friendly fraud or chargebacks. This is where a borrower would call their bank and claim that the payment was unauthorized or is a fraudulent payment, when indeed it really isn't. They're doing this at a time of desperation where they'll call their bank and essentially lie or fabricate a statement to get that money returned. So the card brands have issued statements to those card issuing banks to look out for that kind of thing during this pandemic, thus offering additional relief and protection for merchants, in this case, our lenders.
Wow.
Card brands have temporarily are alleviating excessive chargeback monitoring programs for 12 months since June of last year. So we have about 4 or 5 months left on that. So the card brands understand, hey, during this pandemic, during increase in countless job loss claims, we might have certain segments of borrower demographics that can no longer make their payment. And with that, we understand that you might have an elevated or increased chargeback rate or unauthorization rate. So both the card brands and NACHA have offered relief in that regard. But most importantly, card brands have come a long way, not just because of COVID, but even before that. For the last 2 or 3 years, both Visa and MasterCard have put forth programs that benefit small dollar lenders in the form of the debt repayment program and consumer loans program, which we offer and we put in place for all of our lenders. And what that does is that helps increase payment success rates due to your industry classification code on the merchant account that we provide in a compliant environment. And it also provides cost savings and additional exemption for non-regulated debit cards that you're processing as payment from your cardholder borrower. And we pass those cost savings on to our merchants and lenders that use our platform within Infinity. So wow. There's a lot of things there. And this is all stuff that we can articulate and with our merchants, and we get with all of them and educate them on how to make use of the relief that is available. But I think I'll leave this for last. The most exciting one is Visa has anticipated amendments to their operating rules to possibly fully support payday and single pay loan products compared to many years ago, starting in 2011 through Operation Choke Point. No payment processor wanted to support this industry because as the rules are still written today, single pay and payday lenders with those types of loan products are prohibited from processing payment on a Visa or MasterCard debit card. And we, as LoanPaymentPro, can offer variances that allow those lenders to do so in a compliant fashion. And we give them a variance in amended operating agreement with the card brands in order to do so using our technology. And that's the difference in using a general merchant service provider or a generic payment processor compared to someone like a LoanPaymentPro who focuses on this business model and your loan product integrated within a platform like Infinity.
Wow. Dang, that is extremely helpful. And honestly, I did not know about that kind of stuff. So the take-home message for our viewers is reach out to your payment processor and ask these questions, right? And see if their payment processor, whether it's LoanPaymentPro or somebody else, can help with this kind of stuff. And if they can't help with this kind of stuff, then it might be time to kind of reach around and network a little bit more. Hopefully they could reach out to James, you, or Michael and ask you guys questions, maybe get some help there as well. But it sounds like there's actually a lot that can be done.
Yeah, absolutely.
Yeah. Way cool. Okay, Thank you for sharing that. That's really helpful. You guys, I kind of was hoping to dive into the next section and talk about payments and how payments relate to industry changes and the transition of the political administration and things like that. Are you guys good with that?
Bring it on.
All right. Way cool. All right. So we find ourselves in a time where there are many pending changes to our industry, not just the impact of COVID, but also pending rules and regulations. Can you give a high-level summary of how payments play a role in what's going on the payment side of things?
Yeah, I'll take that one. Or at least I'll attempt a shot at it. I think, from payments playing a role with all of these changes that are occurring, number one, we need to make use of automation. And that's what's great about Infinity and the platform that Infinity offers, is that it allows a lender to focus on lending. It allows a lender to focus on, like Michael said before, all the moving parts that make up this business model. I'm sure you guys have, 100+ service providers and integrations, and that's 100 moving parts, essentially for some lenders. So focusing on automation, that's where payments can help automate and provide efficiency, is streamlining that process in an automated fashion for all the recurring payments between a lender within its loan management software, taking payment from its borrower. And Infinity does a great job at that. As we know firsthand, because Infinity makes use of all of our functional endpoints and feature sets that help automate that process. Another element of payments to the space is the transition from ACH. ACH was not a thing of the past, because it's still very important today, but it used to be the primary payment method. And now debit card instruments, because of the application of the real-time notification of whether you're getting paid or not, or that payment is going through, provides significant benefit over ACH, which is archaic. You have to wait a day or two. The system was built 20, 30, 40 years ago, and it's not built to be implemented into a streamlined process like this. So it's very difficult to be effective as a lender today with just ACH. So payments is really coming into play with all these changes to the industry, with the usage of debit card and technology and real-time payments, faster payments, not just taking payments in from your borrowers, but funding the loan proceeds to your borrower. And we'd love to get a chance to talk about that. But, that's the second. The third would be, focusing on creating a frictionless and seamless solution to collect payment from your borrower and communicate this notification of payment. How can you eliminate variables that cause or increase a declined payment or a payment failure? And that's what, we help bring to our lenders and merchants to focus on how they can be more effective to taking payment. And it's all about increasing payment success rates, lowering FPDs or first payment defaults, and lowering default rates. And we have tools that are built into our technology and into our payment gateway that are in turn built into Infinity that allow lenders to do so.
That makes a ton of sense why this is extremely important for people to be thinking about right now. Because if we're thinking about the current situation of the world and our demographic, people, they want their money immediately. They're also probably short on money, right? So you also need to be able to take payments back, fund the loan, like you said, and take payments. It has to be smooth. It has to be fast. It has to be, that's what this current situation is demanding of us. And that's also the trend that society was going in anyway, right? Like you go online and you want to buy a health supplement and you see that little thing that says, pay $5 now and pay monthly, right? Like taking installments on just any simple product online. And that happens immediately and it's smooth and it's easy. And if we want to stay competitive, we have to start leveraging that same type of technology. Is that kind of what you're saying, James?
Yeah, absolutely. And most lenders today only have ACH in place. They only have the ability to take payment from their borrower via the bank info, that account number and routing number. ACH is just one tool of many. It's just one club in the golf bag. And we've got all the payment products and solutions brought into one solution into Infinity. We've got, I think, 4 or 5 payment solutions integrated within Infinity's settings section, and that's going to help automate that process. The old way used to, force a lender to take a file or flat file and upload it into a third-party ACH terminal or a batch file. Now with debit card, with seamless integration, with even ACH same day, it's all done through an API integration. So, the impact of all these changes, payments plays a big role. And I think, we believe at the end of the day, it ends with the payment. It starts with lending the money to the borrower, but if you can't get paid back from your borrower and you don't have the proper tools to do so, it ends there too, unfortunately.
That makes a ton of sense. It actually makes a lot of sense too with the importance of payments and the role that payments play in a lending organization, that you really need to be leveraging the absolute best technology in that area of your business.
Yep.
Right? Yeah. Cool. All right. Thank you. Michael, do you have anything that you want to add? I feel like I've been grilling James for a minute on that topic. No. Was there anything, or are you ready to keep going?
He's doing great. I don't interrupt him.
Nice.
That's not true outside of this call.
Way funny, guys. All right. Well, then let's go ahead and jump into the next topic and talk about what lenders can do to mitigate the impact that COVID and the pandemic and everything's been having on us right now. So let me ask you guys this, and you can figure out who you want to have answer it. What is the biggest mistake you see lenders making when they're sending out money or collecting money during this time?
Yeah, I can jump in, and I'll put my lender hat on for a second. So kind of from my experience on the storefront side and also online. So storefronts, the biggest thing is if you were still requiring in-person visits to either receive funds or to make a payment, that's an issue. And especially one thing that we saw a lot, especially if you were in states or areas that had lockdowns, is that simply the business couldn't operate. The city or state shut down any non-essential businesses. And, if the customer had a loan due, tough, what are they going to do?
Yeah.
If the customer, it's a returning customer, existing customer, want additional funds, there's no way that you can even give them funds unless you are somehow online. So that's the biggest piece, is making sure that one, you can fund online, especially to existing customers. That's the biggest piece. We understand that if you're storefront only and you try to transition to online solely, that requires a little bit different set of, potential experience and some other difficulties there, but that can be worked through. But the biggest thing is that for any existing customers, make sure you're providing a way where they can receive funds, without having to come in and make payments. I mean, and the easiest thing, kind of to what we've kind of been pushing on this whole series is, being able to provide some kind of instant funding. Same day ACH is great. Push to card is probably the best solution. I mean, even next to ACH. And then from a payment side, being able to collect that payment, hopefully via debit card or ACH is kind of what we would recommend. One thing that we've seen a lot too, and this applies to storefront and online, and maybe not so much now because we're kind of getting past the initial hump of the pandemic, but on the collection side is that, from what I saw is that there were a ton of customers coming in that they'd been furloughed, really couldn't do much. They were offering to make payment plans, and, some people were not able to be flexible with the customer. So, if they're, I think the communication with customer is key. So if they're having difficulty, then being proactive, reaching out to you saying, hey, I can't make this payment, I need to make a payment plan. That is, from a risk standpoint, that is one of the best customer behaviors you're seeing because they're not going dark on you. So it's being flexible. It's making some kind of payment plan. Take whatever you can get, really. I'm not saying take $5 a payment if they're in collections, but, $25 a payment, $50 a payment. It's a lot better than nothing. And here's the best, I wouldn't say opportunity, but, in every dark situation, there's definitely some lights and some ways that improvements can be made. And one of those is that if you're able to provide a level of customer service during this whole experience that customers don't receive. I mean, you think about most of our customers, they're not really, they probably don't get a really high level of customer service anywhere they go. And if you're able to work with them, show that you're compassionate, you understand where they're coming from, that's going to pay off dividends as far as getting a repeat business in the future. And we all know that this business really depends on, both, maintaining and growing a repeat customer business.
Wow. That makes a lot of sense. And I actually had not thought of it from that angle, but what you're kind of saying is a lot of people are in a hard situation right now. And if we can be human and connect with them, treat them with respect and take good care of them, it will amplify our brand, build more trust with our borrowers. And then it should end up being better off for our business in the long run anyway, and for our customers. Because a lot of times someone who's going to be borrowing, their bank's already told them no, they've already been turned away, they haven't been treated well, and you are there to treat them well. That sounds like a really intelligent long-term strategy. Did I understand you correctly?
Exactly. Yep, 100% correct.
And I'd like to add to that. I think that the question you were answering, Michael, was, what mistakes are lenders making in both sending out money, funding the loan proceeds, and then collecting payment. I think there's a lot of lenders out there that are not compliant from a PCI standpoint. PCI compliance. We've heard of PCI compliance. Originally stemmed from the vulnerability of data breaches that were occurring with large retailers and online merchants, and it shouldn't be challenging. It's turnkey. Your payment processor should offer you automated PCI compliance and secure tools to process and take those payments. And we manage that certification compliance and those quarterly scans and annual certifications for all of our lenders by default. The second thing is payment authorization. Lenders are not properly taking payment authorization in an efficient manner. They're not doing it properly through the loan origination agreement when that's the best time to capture it. You've got your borrower engaged and they're willing to sign that agreement because that is what's going to allow them to continue through with the purchase of the loan product. And we see a lot of lenders making that mistake.
Dang, that makes a lot of sense. Thank you for adding that. That's really helpful. So what about this, you guys? Do you have any recommendations on what lenders can be doing today to reduce the impact of these challenges, to reduce the negative effect of making those mistakes? Any thoughts there?
Yeah. Michael, you want to take a crack at that? I think it's a continuation. It kind of relates to the previous question.
Yeah, so I think there's a couple of things. One of them, which is not necessarily payments related, but it's going to definitely help, is make sure that you are utilizing one of the many services in the space that provide bank verification and employment verification services. And if you don't want to use one of those, then do it the old-fashioned way. Do a three-way call with the bank, with the customer, make sure they actually have the bank account, that you're seeing deposits coming on a regular basis. Same with the employer. There are a lot of services now, especially in the employment verification side, that are very inexpensive, that are actually plugged into ADP and all the major HR providers. So it's not like the old Work Number days where you're paying $15, $17, just to get a 50% coverage rate to see if someone's employed or not. There's a lot of services that are out there, from both the bank side and from the banking account and account verification side, but also the employment side. That's probably one of the biggest things. And one thing that, like I said, we keep touching on is just, the ease of use, reducing any friction or pain points with the customer to, one, take out a loan, make a payment, providing as many options that are available as possible. But then also, to James' point earlier too, utilizing multiple different payment methods or payment strategy, especially as it comes into an impact with the upcoming, NACHA rules and with more specifically the CFPB rules. So, you should be utilizing, even within the one payment plan for a customer, not just purely ACH or just your debit card, but alternating back and forth based on the customer's behavior and the risk levels associated with each customer whenever you originate them.
Yeah, and if I can add to that really quickly, Alex, what can lenders be doing to minimize impact or the negative impact and outcome from the challenges that we all face together? First and foremost, lenders know this already, but offering payment forgiveness and skip a pay or skip payments to offer relief to borrowers who actually need it, and having a good vetting process throughout that. Us as a payment processor, we want to see best practice, carried through and translated through taking payment from borrowers, and really only take payment from your borrower when they can afford to do so. Now, they have an obligation to fulfill, but during these challenges in this time, is there a scenario or a situation where you can offer some form of relief? And I think that in the end will pay dividends with that client relationship. And that comes down to, plays into communication, discovering who is truly in need of that. Implementing an online text to pay option, an online payment form or text to pay option, creating that non-human based interaction payment. Lenders implementing that have an increased payment success rate. We offer those tools within Infinity and to complement Infinity at no additional cost. Every one of our lenders gets that out of the box. So lenders should be making use of that to minimize impact. Additionally, working with your payment processor, whoever that may be, to move you from a monthly billing structure to a daily discount. And that offers you as a lender relief with your payment processor, which is something that we offer. Getting your payment processor to update and verify your billing descriptor and how that shows up on your borrower's bank statement. If you are known as ABC123fastloans.com and the billing descriptor shows up as 321 Capital Solutions Inc., your borrower doesn't know who that is. So you have a higher probability and a risk exposure for chargebacks and customer service issues. So really understanding that you can do little things like that to help create the efficiency and effectiveness of dealing with this impact. And then last but not least, and I think we can talk about it in a dedicated question, but is offering real-time funding, push to card and same-day ACH, getting your borrowers the loan proceeds immediately, as soon as possible. The days of Friday after 1 p.m., you've missed the cutoff, you approve a borrower, they think they're approved for $800 loan, they don't get funded till Monday. You've already started a new relationship with your customer on the wrong foot. They needed that money on that Saturday, that very next morning, and you couldn't fund them until Monday. Well, with our payment solutions within Infinity, Infinity can now fund that borrower within seconds of making that loan decision and that approval on Friday, even if it's at 11:30 at night or 3 a.m. on Saturday. And these are things that lenders should be doing. Additionally, going back to updating the billing descriptor and all that, it's chargeback mitigation, understanding how to better protect yourself as a lender in managing chargebacks. We have high volume lenders that have high rates of chargebacks and disputes just due to the nature of high volume that they have. And sometimes they have 2, 3, 4 full-time dedicated employees. And during this COVID pandemic, they've had to increase that staff, which only increases expense and costs. So it's having a chargeback mitigation program in place and understanding how to eliminate and prevent them from happening in the first place is what lenders should be doing.
Wow. Tons of helpful tips, guys. Thank you so much. I really like what you're saying here. You're saying, something like a pandemic or COVID or even a presidency is temporary, and you figure out how to adapt, with a bunch of little strategies. But in the long run, lending, borrowing, our customers, they're not going away. So we prioritize the human relationship, and then we put in a bunch of things into place that help us to maintain that relationship and survive and thrive during interesting times. Is that kind of like a good summary of what you're saying?
Yeah. What do you need us for? That was perfect. No, you're exactly right, Alex. That's what it comes down to. And it's having that, partner who speaks volumes to putting forth the effort to working with you to get those things done.
Yeah. During this era of COVID and conducting business, you've mentioned that lenders should be making more use of technology-driven payments. I feel like that's been a big theme of this whole conversation, right? So can we talk about real-time disbursements, instant funding, push to card? Can you kind of tell me more about all that?
Yeah, absolutely. It's all the same product. It's the ability to fund the loan proceeds to your borrower in real time. 24/7, 365. At any given time, you can make those funds available at the time within seconds after your credit approval or decisioning of that borrower. You can have the funds available in their bank account within 30 seconds. It's a revolutionary product that's available on the market today, driven by Visa Direct and MasterCard Send. There's
Wow.
only a select few of payment processors that offer this. And we provide this within Infinity. Infinity is our highest volume partner to provide this push to card product. And we're really excited and proud about that because it's driven by Visa and MasterCard compared to other solutions that are subpar where it's only driven over the debit network. So those lenders are, processing their disbursements through payment processors who can only support it on the debit networks like Star, Pulse, Nice, et cetera, where we do it over the Visa and MasterCard rails. And we're able to support all lender types, all loan product types, and all business models in the world of consumer finance. And that is key because it allows you to take the most advanced technology, integrate it into the LMS, and be more efficient at funding your borrower. So now you're going to have increased success rates, increased rate of retention. That borrower is going to remember that you funded them within seconds of approval. You got them the money of the loan funds during the time when they needed them, when they needed it. So it's really powerful. Additionally, it supports a fully remote loan origination process. Like Michael mentioned before, it takes the whole element out of funding loan proceeds to an agent or a pickup location through Western Union or MoneyGram. Now with push to card, all you need is the account number or the card number on the front of that Visa or MasterCard instrument, and you can fund your borrower. 99.9% of instruments are supported. And this allows lenders to start amortizing and generating interest revenue on the day of approval. Compared to ACH, like we use that example of funding a borrower on Friday, they don't get the funds till Monday or Tuesday. Well, you can't start generating interest revenue by law per that license you hold within that specific state until they receive the funds. Well, now with push to card, or also known as instant funding and real-time disbursement, you're funding your borrower the loan proceeds immediately that day. So that's 2 additional days of interest revenue, and it adds up when you talk about thousands of loan originations on a monthly basis. So it pays for itself, it really does. And it increases the payment success rate because you're collecting the debit card, which gives you a further advantage as a lender to not only obtaining bank account info, but now the debit card info, because that's how you're funding the loan. Well, if that's the same instrument where you're taking payment from, you have by default, a higher rate of success and increased probability of getting paid. And all of this is collected when you have your user engaged. And within Infinity, you can validate that card instrument. You can tokenize it within Infinity and LoanPaymentPro, and then take the future successive payments on that same debit card that you funded the loan proceeds to. So it taking advantage of that during this COVID era is immensely valuable, and every lender should be practicing it.
Wow. Thank you. That is an incredible overview, makes a ton of sense, and that's definitely cutting edge stuff that I think everyone needs to be utilizing in their business. Thank you so much.
Yeah.
Very cool, guys. Thank you. So can you talk some about some of the features and functionality that lenders should be looking to make use of? For example, can you just give us like the top 3 things that you're seeing that the most successful lenders are using when it comes to payment processing during these crazy times?
Yeah. Well, I think there's a slide we're referencing here, but although there are many that we offer and that our lenders practice today, if I were to limit it to just the top 3 things that they can do, it's making sure that they're fully equipped to accept all payment methods, being prepared. If you have a borrower on the phone who wants to make a debit card payment and you don't have that ability to do so, that's a pretty painful phone call to receive from your borrower, especially if they're a defaulted file and they want to make payment, but you don't have that ability to take payment. You only have the option to process an ACH payment, and you don't get real-time notification if it's going to go through or not. at that given time, the borrower has the funds in their account, but by the time it processes, it might be the next day or the day after, and those funds are long gone. So making sure that you're properly equipped with all the payment products and processes and solutions that are offered within LoanPaymentPro and in the Infinity integration. Second would be to make sure that you as a lender have the ability to take an SMS or frictionless payment in the form of an online payment through the web, a payment form that Infinity offers, or through an IVR hosted phone payment, which Infinity also offers. So that's a big key there. And last, I'd say if it were to make the top three, it would be account updater. You don't hear a lot of payment processors talking about that because they don't have the ability to offer it. And what that is, within LoanPaymentPro, we validate and tokenize all the card data and bank account information for all lenders, borrowers, and all those customer profiles, right? So when it comes to debit card or prepaid card, any Visa, MasterCard instrument, a lot of them they expire or they go bad because they were, there was a fraudulent transaction at, a shopping mall, and that card holder has to call their bank, block the card. And if that was the card that was stored on file within Infinity and LoanPaymentPro for a lender, they go to take that next subsequent scheduled payment, it's going to fail. So with Account Updater, which is this new product and feature that we offer, that card is automatically updated. So we work with the card issuing bank on behalf of your borrower through the Visa MasterCard network, and we obtain the updated bank card instrument information without you as a lender having to go and call your borrower or try to hunt them down, get them on the phone, or get them to refill out a payment form again and update that card info. So at the life cycle of that loan file with your borrower, as a card holder and as your processor, we can always maintain and update that new card that is replaced by their bank on the back end. So I'd say those are probably the top three.
Very cool, you guys. Thank you so much. Incredible. Let's go ahead and jump into kind of the final section of this whole presentation. Can we talk about the CFPB's pending payment provision rule and also the NACHA rule update? Yeah? All right. Let's do it, guys. Thank you. So first question, what can you tell us about NACHA's upcoming rule and more importantly, the CFPB's pending payment provision in the small dollar lending rule?
Well, unfortunately, this is something that we all face. I think this is a topic that has been spoken about to the point of exhaustion from all different elements and facets of this industry. But it really hits home with us as a payment processor. NACHA's rule obviously is the governing association for ACH and bank draft payments, and the CFPB's pending small dollar lending rule with its payment provision is going to have a big lasting effect on lenders when it comes to payments. So lenders need to understand how to be prepared and how to implement the ability to comply. And I think Michael can offer more insight around the NACHA rule, but the CFPB rule has been long awaited. It mostly stemmed around eliminating the cause and what triggers overdraft fees. And this is, the rule prevents lenders from taking a payment from its borrower after it's received 2 consecutive declined failed payment attempts for insufficient funds. And what's neat is we've built some technology that allows lenders to comply with this rule, yet not let it negatively affect them. And this is something that we'd like to share with the audience and attendees in a bonus item later. So it's a highly proprietary process that we're confident and really excited about because it provides what lenders need to be effective to continue through with the rule, yet it supports what the borrowers need, and that's continued access to credit and allowing lenders to continue to maintain that. Additionally, you've got the notification attempts built into the rule, where the lender now has to communicate the upcoming payment, and it's how do you manage re-obtaining payment authorization when you have the 2 consecutive failed payments. And Infinity does a good job at managing and automating this. And there's a lot of LMSs that we see that haven't yet even prepared to build the functionality to automate or comply around the rule. So that's in a nutshell at a high level what we're looking at. But there's more to it, a lot more that we can get into if you like.
Very cool. Yeah. I think today I'd like to ask you just how people can kind of prepare for the CFPB's payment provision. But as far as what James mentioned, the bonus item, everyone who's watching this, that is something that will be available to the All Access Pass holders. Anyone who's upgraded to an All Access Pass will get access to that item through LoanPaymentPro, which is a really awesome something they've provided for All Access Pass members. So thank you, James and Michael, for that. Let's go ahead and jump in real quick. What can they do to prepare for the CFPB's pending payment provision?
Well, get with your counsel, get with your attorney, understand the moving parts, get with your payment processor to make sure that they understand the rule and how they can support you complying with the rule. But at the end of the day, and most importantly, it starts with the LMS. It starts and ends with the loan management system supporting the functionality that's needed for the lender to carry through to comply with the rule. So the LMS has to support that, so it allows the lenders to perform the necessary action to automate that process for the lender. So I think to be prepared for it, they just have to better understand the rule from all aspects, and then make sure that their loan management system works with their payment processor to support that in an automated fashion. And that's what it comes down to.
I love it. That's good. Thank you so much. And then what about the purpose behind the notch change? Can you tell me more about that?
Sure, I'll jump in. It's actually really simple whenever you break it down. So it's just making sure that you can tie the customer to the bank account, and that you can detect if the account is real or not, if there's a fraudulent transaction or customer coming through. Notch does a really good job of outlining what they're looking for on their website. But yeah, it's really just as simple as just tying the customer to the bank account and making sure that you can validate both of those.
Nice. Very cool. And how can lenders prepare for that upcoming notch change?
So if you're not already doing this, you should have been doing it before, but there are several services that you can utilize, and I touched on a couple earlier. Make sure that you are tying the customer to the bank account. I mean, there's nothing worse than making a loan and the customer is not tied to that bank account. The account number is wrong. It's going to someone else. That's kind of basic payments 101 and collections 101 you should be looking at. But, there are several different methods to be able to do this. There are several third-party, services in the space. There's some bank account validation services like a LendMate or Decision Logic. I think Microbuild has one as well. Then also, several different, most of the bureaus have bank fraud detection products as well. Experian, Equifax too, all have something there. And then, at the end of the day, you can also do a valid 3-way bank call with the customer and the bank to ensure that they are tied to the account. Is this customer on this account? Can you confirm the last four of the account number ends in this, etc. So, it's really not that difficult. I don't think anybody should be really sweating it unless you're not doing some kind of bank validation so far. In the Nacho website, actually, it's a very reasonable rule and kind of what their expectations are. They don't provide a lot of guidance as far as exactly what you're supposed to do, other than provide a commercially reasonable method to verify the identity of the customer with a bank account. So they have several different examples on their website of what they'll accept, and just ways to utilize it. Even doing a pre-note authorization could potentially work too, or penny deposit transactions. So it's not that difficult, and I wouldn't sweat it too much if most of them started doing this to begin with.
Very cool. Very helpful. Thank you so much, Michael. All right, you guys, it has been an incredible interview. Loan Payment Pro team, we really appreciate your time. Thank you for supporting TCLS. Thank you for sharing this with all of our attendees. It's been extremely valuable, and I am really grateful to have had this session with you guys.
Yeah, appreciate it, Alex. Thanks for having us. We're really passionate about our partnership and what we offer to the lending space, and it's only made possible with the integration with you guys. So thank you.
Awesome.
Absolutely. Thanks, Alex.
Yep, thanks, guys. Thank you, James, Michael, and Loan Payment Pro for sharing your expertise and advice with us today. That session was a ton of fun. We'd also like to thank you for offering our All Access Pass members free push-to-card instant funding and your secret bonus session on the small dollar rules payment provision. It is extremely generous of you to offer this $20,000 bonus to our VIP attendees. For anyone who is interested, you can upgrade to the All Access Pass if you haven't already by clicking the link found in the event platform. To summarize the session, we're seeing a 17% increase in declined payments, a 72% decrease in face-to-face payments and in-store transactions, 25% smaller loans overall, and a 30% decrease in collection rates. You can combat these stats by leveraging the right partnerships and technology. One way to do this is to reach out to your payment processor and pick their brain on the items James and Michael mentioned in the session. James and Michael are also both available in the event platform. Please reach out to them if you have any questions or need their assistance. This is yet another perk of attending the live stream of the Consumer Lending Summit. Okay, enough for now. Enjoy the 1 hour lunch break. Afterward, we will see you in our next session on conversion rate optimization for your online portfolio.